Welcome back, everyone. Next, we have Patriot AG Corp. It's a private company run by the Severson family who migrated from Norway to North Dakota in 1895. They settled in the prairies in Canada and present a sixth-generation grain farm composing of 4,100 owned acres and 1,900 rented acres, of which they're focused on growing barley, beans, canola, peas, and wheat. Happy to welcome CEO and CFO Eric Till, and we'll also hear from the COO, Kyle Severson. Welcome, Eric.
Thank you so much.
Glad you're here. The floor is yours, and when you guys are ready for some questions, call me back, and we'll kick off the Q&A.
Sure. Nice to be back. For those of us who haven't met us before, welcome. We're happy to be here. We're going to give an update and then kind of go through a bit of a refresh for those who haven't met us yet. So I think the overall introduction here is Patriot is a fifth generation farm. As we've mentioned, we're farming 6,000 of really tier one farmland in the Saskatchewan area. Really want to emphasize the uniqueness and the economies of scale here. I realize that's kind of hard to put into context. It's very hard. Like the family farm operation that you would typically see in this region is just not on this scale, especially in a region that has all of the infrastructure and resources that Saskatchewan has built out. They really want to be the hub, global hub of the canola sort of industry. It's traded there on the exchange. Delivery is there, processing plants, exporting facilities are all there. And this Patriot is just really plugged into all of these resources and has reached an economy of scale that is just really hard to find. And number one, and then number two, even if you do find it, the ability to invest in it and get exposure to that in your portfolio is even harder. Most of these are closed off. They're either giant mega corporations where you really don't have that sort of niche exposure that you might want, or they're small and private and you can't invest in them. So I think that Patriot, that we're looking to open up investment in such a sort of strong profile, I think is a really compelling opportunity for investors. That's sort of the high level thing. Another thing that I think is really interesting is there's been a disconnect, which I think we talked about last time, between the farmland values in the US and the farmland values in Canada. Even though we're arguably producing even more efficiently with the amount of rainfall that comes into this farmland, the values have just this disconnect between the values in Canada versus the US, even accounting for foreign exchange, Canadian dollar versus US dollar. We have seen land values start to catch up in Canada, reflecting this trend, but we think there's still opportunity to acquire more land and large sort of land deals beyond just what your mom and pop sort of farm would do, substantially, larger deal sizes in the many thousands of acres. And I think being able to fold that into this diversified product business that we're building around the agriculture and food processing is also very attractive. So that's sort of the 10,000 foot view that we've talked about before. I think another thing that's interesting is the amount of storage that we have on site, the best in class farming practices that we enjoy being a fifth generation farm. Our fertilizer and other sort of chemical processes are all really set us apart and both increase our yield and increase our profitability by decreasing our sort of price per acre to farm. And so I think with that, one of the updates since last time we spoke is we've secured a debt capital provider from a bank lender at pretty attractive terms. With that, that's going to enable us to finance a lot of the plant and machinery that we're going to develop to build our own processing plant that we've talked about. What we've gone to market with, and we've started testing the market and talking with multiple different distribution channels, is that the supply just is far outstripped by the demand for canola oil right now. It's used in a whole bunch of different products, from cosmetics to cooking to food to lubricants. There's just a massive amount of demand, and due to various market factors around the globe, it's kind of just created this supply shortage that we can plug into, that we expect to sort of exist for at least the medium term. And with that and sort of some of the context we've already talked to, we just think that any supply that we can generate through our processing plant will just be immediately absorbed by the market. There's just that much demand. We won't even make a noticeable impact in the overall supply in the market. So we think we can just fold right in and start sort of printing cash with this plant as soon as it comes online. We're even trying to forward sell some of the contracts to help our cash conversion cycle. So with that in mind, we are still looking for equity partners. This is probably more of a, traditional private equity investment that would then be used as a bridge financing to enable the IPO. We still do want to have an initial public offering. We think it's an attractive opportunity that we think a lot of public market participants would want to participate in. We're probably looking to push that into 2025, 2026. We would expect that to coincide with once the plant is fully operational, it's stabilized, we've worked out any of the sort of kinks, we realize what scale we are, and we've kind of levelized to make sure we're maximizing our output for what we can easily offtake in a really efficient manner, so we're not building up inventory. So that's number one. And then number two, that our contracts are all secured. We are churning this stuff out, and we're probably looking for expansion at that point. We think we'll probably be conservative in this initial build out so that we would expect 100% of offtake to really just be flowing immediately, even probably less than we could. And what I mean by that is we could probably produce more than what we're building this initial plant out to spec. But we want to be conservative. We want to make sure it's just really easy for us to offload that with absolutely no hiccups. And then once we have that sort of stabilized, look to increase our capacity. And I think when we're increasing the capacity, that could be an attractive use of proceeds from the IPO. So that's kind of how we're thinking about it right now. So there is still a potential to raise equity capital right now. I think we would pair it with the leverage that we've secured and would be looking at really attractive opportunities for investors. What I was just speaking to there is the CapEx build out. So we're looking now at a 60 metric ton per day processing plant. We would expect that to come online in May 2025. This would create a refined canola oil output of around 9 million liters per year. And for context of that, there's different products that we can produce and we will plan to produce. This is our initial sort of read, and depending on how we sign our distribution contracts, this could change a little, but processed canola oil can be used for any sort of high heat cooking. You could deep fry with this. It's really a premium sort of cooking product that can be used in industrial applications for industrial kitchens, things like that. That's one option. We could sort of have a virgin, unrefined version that's more, used in just raw food, salad dressings, consumer, the stuff you would buy off the shelf at a retailer. That's another potential use. It'd be relatively easy to also incorporate biodiesel or jet fuel output through additional refinement practices. So this plant could offer a variety of offtakes for context, but right now what we're targeting is this sort of refined canola output that has the most industrial uses, and we think we can sell that in large quantities based on the distribution contacts we've had to industrial sort of kitchen uses and things like that. It has the higher cooking temperature before it burns off that enables it to have a larger variety of uses. So that's why we're circling that one for now. It's the most refined, largest amount of uses, the most stable product. It has the most uses, and it's very easy to just walk that back if we want to make more simplified uses or retrofit, refit it to have different applications for it. So there's a lot of opportunities there. In addition to the oil, it creates around 10,000 tons of meal output per year, and what that is used for animal feed. So really, none of the idea here is a farm to table or farm to industrial application use here, and there's no waste. So we get the seeds, we plant them, we farm them, we harvest them, we put them to our own plant. We sell the oil that we process, and then we also sell off the byproduct meal that we process. So there's really no waste of any of the crop happening here. And we think that's unique because we're really capturing that entire supply chain. We control the feedstock all the way to the end product, which we do have the option to do branded and build out a brand, or just provide sort of a industrial sort of quick, where we're just a part of the supply chain for a larger company, like a household name, is some of the things we're looking at. So again, we think that's really attractive. And as we build out the plant, we still have the opportunity to capitalize on this undervalued land, and just really drastically ramp up the amount of land that we farm. We implement our best farming practices into what have otherwise been sort of mom and pop, or, just maybe not quite at the level of sophistication that Patriot can bring to the table. Increase the efficiency, increase the yield, and just push that feedstock straight into our plants and generate more product and just continue to capture that incremental margin by controlling the supply chain. And with that, this is sort of where we're looking at it right now. I don't know if you can see it, but this is our 5-year revenue and EBITDA forecast. We would expect to be profitable pretty quickly, and that's because we have multiple different revenue channels. We're really positioning ourselves and think of ourselves as a diversified industries business. All of the businesses center on this core sort of agriculture and food business within Saskatchewan, but we're capturing value in multiple parts of the supply chain, be it farming, be it processing, or being logistics around this enterprise. And because of that, we're generating revenue and profit in all of these sort of different parts. And I think that makes us more, stronger, a little bit more of a fortress. It's a little more diversified through the revenue channels, and de-risks us a little bit and enables us to have more cash and profitability from different businesses to help fund other initiatives at different times. So again, we think that's really attractive, and we'd be targeting that year 2, year 3 sort of time frame to be going public. From there, I think the rest of these slides are all sort of boilerplate. Happy to go through them. Why canola? Some of the stuff I touched on, the supply chain and just global supply is in a bit of a shortage. There's a variety of nuances for that. But the high level is we'd still expect there to be more demand than supply, at least for the medium term. And we think that's an attractive place for us to come in. And we think we can just be a long-term player. We don't believe it's going anywhere 20 years from now. We think there'll still be demand, whether it's biodiesel, aviation fuel, cooking oil, or inputs for cosmetics or lubricants, anything like that. It's a sustainable alternative to petroleum, and it's a renewable energy sector. And so I think that's another way to think of it. I should have mentioned, I see us not only as a diversified product company and services, but it's a diversified product company, focus on sustainability and renewable sort of sources and implementing clean, transparent, and safe practices across our supply chain. And I think that's what we're trying to position ourselves for. And when you see us go public, I think you'll see a lot of initiatives and sort of things we can point to around that. And again, this is more about sort of Saskatchewan being, the Saudi Arabia of canola oil, they say. And that is, all that infrastructure I was talking about is already built into this region. And we don't expect that to change. Again, best-in-class farmland, lots of rain, very fertile soil, and things like that. Competition, there's other farms operating. Most of them are smaller scale than us. You can't invest in any of them. They're all very closely privately held. And again, we're still implementing, because of some of the resources we have at Patriot, better practices, more sophisticated, more efficient, and sustainable practices that make us more profitable and higher yielding than our competitors. We talk a little bit about that here, and the scale that we've reached. So, I'll leave it off and happy to take questions and Q&A if we want to rehash some of the other points. But I think what's important is we've reached this very high economies of scale in the region. Saskatchewan is a global leader, if not the global leader, in canola oil production. That really just has a whole bunch of tailwinds behind it, pushing it forward, that we think is just a very attractive place where any product we can incrementally supply to the market will just be immediately absorbed by the demand. And we see land values increasing again. So we see a bit of an arbitrage opportunity in land values. So we'd like to capitalize on that as well. Tons of upside. And again, just reiterating, we see ourselves as this diversified company focused on sustainable and transparent practices with an emphasis in the niche of the agriculture and food industries within the Saskatchewan province. So with that, I'll open it up to Q&A. And yeah, happy to hear what you guys think.
Great job, Eric. We do have some questions for you. Scott asks, how has the uses for canola grown and what has that done to the demand?
That's a great question. So it's always been in pretty robust demand since they sort, and this would be a history lesson. I'd love to chat offline about this. I'm not the total expert in the history here, but my understanding is when they sort of isolated the canola crop decades ago, it became, because of the cost and the way it's grown and the inputs for it, it's an efficient crop to use for a variety of uses to get that oil. So the percentage of the seed that's harvestable oil is near 50% of the seed weight, which I believe is fairly attractive. And with that, it's become a very popular use for things like cosmetics and lubricants. Anything you would use an oil for, an efficient oil that you can produce at relatively low cost that's a renewable source at scale is attractive. So there's always been a very robust demand for that. And that includes sort of cooking oil. So there's this like stable base case of demand. And then in addition, as population has generally increased globally, you would just expect any incremental population growth to increase the demand, in a stable way. So that's just sort of one piece, like a secular piece. But the additional pieces that I think you're asking about, it has proven to be a viable and attractive source for biodiesel and renewable fuels, as well as aviation fuels. And those have really started ramping up some of the demand. And the supply just has not caught up with it. If anything, certain regions have cut back on supply who used to be producing it, has switched to other cash crops that were more efficient for their region, again, because of nuances around water needs and other growing conditions and seasons. Where it just wasn't quite as efficient for them to produce that crop as maybe a palm or something else. And so because of that, you have had these more increase in demand, like a demand shift because of these new uses, but supply just hasn't really adjusted for it. And that's why you see the disconnect right now.
Well, I'll touch on that a little bit too, Eric, and why I wanted to join is the primary factor, what the scientists discovered when they made this seed in the early 80s, was it had high energy content in the seed, which is being driven across Eastern and Western Europe right now with Fendt products using 100% biodiesel. So you're going to see farms, we're ahead of the pack here and leaders in innovating our technology and becoming the first to market at this micro scale. And what you're seeing is these tractors using 100% renewable biodiesel produced from the crop. So instead of gas stations in the near future, you're going to see renewable crops produced from this biodiesel used right on farm. And it's creating some interesting topics, and the technology is catching up as we speak.
And we should talk too, Kyle. We see huge demand out of Europe. This isn't just a North America phenomenon. We see tremendous demand. I think they've called us and asked for the product to get out to Europe. So there's global demand here.
The different trading groups that I'm involved right now, there's daily quotes. Everyone all over the world is looking to get this product. And the problem with it is, so you've got the massive tankers that Louis Dreyfus Commodities, Bunge, Richardson's. Canada produces 4 billion liters of oil right now. And so what the current system is you've got the mega tankers going on touch and go systems that the smaller mom and pop food markets can't access because it's just done on such larger scale. So what our plant enables us to do is to go on the micro scale and package as low as 1 liter bottles to get to that store shelf. And that's what separates us, is no one's got that ability in North America, very few. And we would be the first family operation to compete that. And, my father has looked at our business plan and is nothing but full support. And that's why we brought on Eric to take us to the next level and ask those tough investment banking questions to get us through credit due diligence. But yeah, we're really excited, and I think a lot of people are underestimating the true business plan of what we're doing here, and we're really excited.
Wonderful. John has a question wanting you to elaborate on how you're reducing the cost per acre to farm.
Kyle, do you want to handle that one?
Yeah, I will. Yeah. So my sister's got a PhD or an ag background. So our family is different. We optimize our fertilizer prescriptions with TELUS Agriculture on our prescriptions. Not a lot of family farms are advanced enough to be able to enter these management zones. So currently right now on 160 acres, we've got 10 different management zones in the field where we're moving fertilizer, shifting budgets around, and using variable rate nitrogen and seed on our wheat. Our canola applications are the same. We're taking fertilizer where our yield potentials are maxed out, and if it was just a straight flat rate, it would be a waste of fertilizer. So we're putting those in higher management zones, and I would probably say 25% of the market as farmers are currently doing that. And it's tough though, and you need that expertise of, like my sister, she manages 25,000 acres. So the kitchen level discussions that we have are very high level and high tech and advanced of budgeting. And right now we're currently using a natural product. I can't name the company, but we've seen yield increases by 5 bushels an acre. It costs $10 an acre to apply, and we're noticing a modest return of about $70 an acre just on that practice. And conventionally, our results are we're using 300 less ton of fertilizer than we were on variable rate technology. So huge reductions in emissions as well.
And I think a funny story. Yes. I think a funny story Kyle likes to talk about is, what they talk about at the dinner table when they're just, shooting it at the end of the day. They're talking about these really esoteric and niche farming practices that are just above and beyond what your average sort of farm operation is doing. They're having these discussions and optimizing things that's really at a sophisticated institutional level, not just a family farm level.
Yeah, it really is. And Eric compliments us well. And a matter of fact, I wanted to make a very particular note is we're actually seeding by helicopter today. We've had over 12 inches of rain from start to finish. It's really wet out there, but we get the job done no matter what. This is newer practices, but we'll have some unique videos to show. My family's in the field right now while Eric and I are presenting.
Wonderful. Ken asks, how much are you looking to raise to get the plant online, and what pre-money valuation are you looking at?
That's a great question. We because we've been able to secure the debt capital, it's really enabled us a lot more flexibility. So I think it would be fair to say we could do it with no equity right now. We could self-fund with debt. I think the opportunity is potentially still attractive for investors. I think it could solidify our balance sheet, potentially ease any minor working capital constraints, and just sort of having a little bit of an additional equity cushion could still be attractive. I think we'd like them to be the right partner. I think we'd like them to add value more than just capital. I think, again, because we could sort of self-fund this, I think we'd like to see some value add for investors. We haven't discussed with these new sort of levered return scenarios, a pre-money valuation, or even necessarily a firm dollar amount. I'd be happy to have that conversation, offline if we want to set up a meeting. I think we'd be happy to discuss that. We could get to know each other and go into some of what we're looking at. But I certainly think right now we have a lot more flexibility with that. And I guess to answer the direct question too, the total cost of the plant and equipment, working capital for seeds and stuff, I believe is going to come in at less than 12 million Canadian, 13 million Canadian, somewhere around there. But I've got to double check those numbers.
That's correct. Yeah. From our point of view, if we were able to partner up with with some high net worth individuals that wanted to get pre-seed into this operation of anywhere from 2.5 to 5 million US. That's kind of what we're following. We've got a strategic go-to-market model, so we're going to be moving forward if we don't raise it, but we would like to gain some partners and some steam for the full development scale for an attractive IPO.
Absolutely. I think we might have time for one more question from Tom. He wants you to define year one of your 5-year forecast. And has it begun already?
Great question. Yes, it has. So that is 2024 fiscal year. Our fiscal year runs through October. And then those are consecutive years. I could have labeled it that way, but it's not December year end, October.
Okay, perfect. What final thoughts do you have for our viewers today, gentlemen?
Yeah, look, I think the story has only improved since the first time we presented here. I think we've really demonstrated that we're moving forward one way or the other. I think we are still open to hearing ideas of partners that could come in. We think the opportunity has only gotten more attractive with sort of the traction we've already achieved. And so we're moving forward, as Kyle said, either way. But I think, having the conversations with the right people could still be interesting for everybody involved.
I guess my final thoughts is what does a minimum investment look like in our structure? Probably 50,000 US, for those that are watching this presentation as my thoughts transpire in concluding moments here. But it's really, you can look all over. We've looked on the London Stock Exchange, looked at going there. There's one other palm oil operation that's similar to what ours is going to be going on in Malaysia that's currently public. That's the only conduit to gain exposure to these markets. So we feel that within our management team, and especially Eric leading the charge in the capital market sector, that we're poised for success. And we've mitigated and completed all of our due diligence for a final investment decision that's been positive. So.
Wonderful. Well, we appreciate your time and presentation with us today. Really fascinating to follow you and your journey. And we look forward to you coming back on to giving us some updates.
Absolutely.
Thanks, Anna.
All right. Thank you, guys. Stay with us. We'll be right back.